Traders, welcome back to our price action training lesson. We're looking at S&P 500 and futures. We're going to use price action rules to help us identify where the market is going to go and where are the high probability setups. Right now, the structure of the market is not that clear. We have a spike down, but we also have bullish push working higher. We have series of high highs and high lows. I can see that I have two legs up, but market, instead of reversing, keeps going higher, which is indicating to me that the buyers are still in the market. So because we are getting past this measured move, two legs up, I have to right now think that there is some additional bullish patterns, some bigger patterns. If I'm going to look for a buy channel like this, it looked good at first, but I'm already getting overshoot, another overshoot, another overshoot. So this channel doesn't look that great. So much empty room, and we keep trending higher. So once I can see market working higher like this consistently, this is where what I'm going to do is I basically need to draw a new channel for this push up, simply because price action keeps going higher and keeps going higher. There's a brand new trend developing. So I like looking for different channels. First, I drew channel like this, but the break was so tiny and price action keeps going higher. You can't even touch the EMA while you're breaking, okay? It still looks like one trend working higher. Basically, the price action is not distorted at all by the time you get a break. So I like drawing a little bit spike in a channel, something like this. You don't have to be perfect, but you have to be close. You can see how structured the trend looks. Consistent, healthy push up. So right now, as a price action trader, my job is easy, okay? My job is easy because I'm not worried about anything else. I just have this pattern on the chart, which means I'm only thinking about buying. I'm not thinking about selling. Right now, it's all about timing the entry, okay? The timing the entry means I need to see correction depleting at the key entry point. This is why I'm looking for these channels. This is why I have the EMA on the chart. This is the key entry point. This is where correction phase will end if the key entry point holds, okay? And a brand new push phase can start. So market is correcting. Additional push up, confirming, okay, the trend is quite strong. So I'm gonna really focus now because market is correcting to the EMA. So right now, I'm thinking I may get my opportunity to enter. And we actually have double trap. We have a new high here, first entry long, second entry long. Of course, we're gonna go long so far on the EMA. And we have double trap here, which is also failed breakout. You can see we're going sideways, congestion, break lower. Most breakouts will fail, especially if you trade up into this. So buying here is definitely a decent way to enter. If I'm gonna draw down trend like this, I can see break, push to a new extreme. It looks like two legs down, like one leg down, broad break, second leg down. But mainly, we're paying attention to the fact that this is a failed breakout out of the congestion. And the trend looks so strong. You can see how structured this is. This is pretty much first confirmation of the EMA since the trend started. So the trend is quite strong, and this is great hypothesis setup. You have to use double bar entry, but because the secondary green bar is so close to the first one, this is a safe double bar entry to consider. So this right here is double trap combined with the failed breakout. The more reasons you find to confirm your trade, the more you trust it. Okay, the more you like the trade. So this is not only double trap, this is also failed breakout at the key entry point where the correction phase ended and a brand new push phase may start, because you expect new high following the trend line rule. This is why we're thinking about buying, because the trend is still in play. Great hypothesis setup to start the day with. Breaking new high and uptrend played out. So uptrend played out and we are breaking below the EMA. So I'm going to redraw short-term downtrend like this. I have overshoot. Now if there's going to be second entry short, I wasn't really that excited about taking second entry short here potentially, because this uptrend was quite strong. So it looked like it's a little bit too early to sell. We instantly broke back above EMA and now the structure looks bullish. So what I'm going to do, I'm going to draw consolidation like this because EMA is flattening. We're starting to go sideways because after breaking new high, what is the next market cycle? Correction or reversal. Okay, and since the market is not reversing, you're back above EMA, it looks like some form of a correction. So uptrend played out, we are going sideways. When I'm watching a structure like this, I'm still not thinking about selling, okay? In fact, I was more expecting for prices to right now continue working higher because the trend was strong, we traded up. The break is tiny, so you can argue for the channel to be a little bit wider. So everything is still quite bullish. Now I just basically call this area of development. It's all about getting the high probability setup where everything aligns. Okay, here everything aligned. And now I have a couple of conflicting variables because this downtrend didn't fully test the new extreme. Okay, I'm going to redraw brand new downtrend working lower. New high for central long only. No break here. Market is correcting. We have interesting bounce here of the support. Problem is you didn't fully reach new low. Okay, if you, for example, reach new low and this downtrend is over, taking a long here is definitely correct. It is a second entry long of the potential support. And you can see how EMA is going sideways. But because there is no new low for this downtrend, what if there's going to be the second leg down, creating a new low and then going higher? I think it's a little bit too aggressive, even though it looks good in hindsight. Okay, and market is starting to slowly but surely go higher and breaking the EMA, you have a failed second entry short. You have a failed second entry short right here. Low is low, first entry short, pullback, second entry short failure. And now because the support held and buyer stepped in, and you're back above EMA, there is some bullish imbalance being developed, and you're getting the information that the market is bullish. Okay, we're still not thinking about selling. Okay, there's no confirmed downtrend. You trade it up and you have consolidation. So in fact, I'm more leaning bullish, especially if I'm going to take a look at the higher time frame, 10,000 tick chart. It looks like uptrend is still in play. This failed second entry short is pretty tempting, but problem is it's kind of in the middle of this trailing range. EMA in all these bars, also shortened channel played out like this. A little bit more advanced. I can mark it, but to my liking, I like something more confirmed. It's just a little bit too wedged here. You know, decent enough, but not that great. Gonna redraw now short-term uptrend because I can see structure, price action, a lot of confirmations here. New high first entry long. And this is interesting because I have a first entry long, second entry long below EMA, push above EMA, and this is hollow confirmation setup. And this is where things are easy to read, and this is what we can call a high probability setup. Because I can clearly see that the buyers, they held this price level. We have so many high lows creating bullish imbalance. I'm using market geometry here to draw a brand new channel, and I expect new high to be tested. And this is push above EMA confirming resumption of bullish bias. We expect new high, it's confirming second entry long, it's confirming new high, it's confirming the bullish imbalance. This is a great high-low confirmation setup. I actually do this setup myself, my one and only trade for today. High-low confirmation setup, great signal bar, small bar, we need new high, everything is bullish, hopefully it makes sense. This downtrend played out with the break, attempt to test the new low, but because buyer stepped in, it's considered enough. So this is a great high-low confirmation setup. You can see if you're patient, you can slowly but surely put the pieces of the puzzle together, and you're gonna get the high probability setup. This is why it's okay to be patient, because eventually you're going to find the right channel. You're going to understand with the structure, because now I'm not only working with this channel, I'm also working with the imbalance. Okay, I'm working with the fact that the sellers cannot reach the support. So I'm getting all this information that allows me to trust this high low and make this high probability setup instead of me just guessing, taking setup kind of in a no man's land, breaking new high, uptrend played out. Market spiked lower. This right here is only a lower high and it's an inside bar. Of course, I cannot take. I would need to take failed second entry long at minimum. But you're breaking above EMA, so you cannot take failed second entry long. Of course, you cannot sell below bullish bar. So right now, I'm a little bit patient because I cannot sell. Why are we back above EMA? But I don't really like going long just yet because everything played out. No confirmed channel just yet. This is a very tempting setup here. Kind of like first entry short, second entry short. Further high low here. This is very tempting. This is kind of like gut feeling based trade. This downtrend doesn't have new low and you don't have no good uptrend confirmed. But something is telling you this is most likely going to work. It's going to trap sellers. So if you took a trade here, I can definitely see why. Gut feeling based trade, but it's not fully super textbook because downtrend doesn't have new low. Uptrend played out, you know, a little bit more advanced. And now that I can see market going higher, I need to explain this. Why we keep going higher after breaking new high. And why the push looks so structured. So if I'm going to take a look at the lows here and I'm going to connect these swings, I can actually get perfect market geometry. Market geometry is real, and you can see there's always a channel present for every single move on a chart. Okay, don't believe that those traders who are telling you that the channels are subjective. That's because they're not using rules how to draw these channels accurately. Okay, drawing a channel is a skill. Okay, you need to practice this skill, but the more you learn this, the more you do this, the more you realize that channels are actually very objective, and you will be able to find these channels more and more often. So I have a lot of confirmations. You can see how price action is reacting off of this key level. So I can right now resume buying again. Okay, this is pretty typical where you have very strong uptrend that eventually kind of transform into weaker version of a trend. This can happen. You can see empty room at the bottom. There is no reversal, so there has to be only one explanation. Market keeps going higher. I'm going to redraw the downtrend. Second entry long would be ideal. Second entry long would be great because right now we have confirmed trend. We have bullish bias, but it is a doji inside bar. If you have a better bar here, you have to go long. Clear 2 legs down. Clear break new low at the EMA. You need better bar though. Doji inside bar, not ideal. Even if this was a doji but not an inside bar, I would mark it. The doji is not a big of a deal when the context is clear, but it's an inside bar, so I have to skip. Can I get a hollow confirmation setup? No break below, no nothing, so unfortunately I can't go fully long here. And now I have overshoot. I have overshoot, which means I have to skip the very first second entry. After overshoot, especially since it visually resembles just one leg working lower. So just patient here. It didn't even trigger properly. There is no break above bullish bar, inside bar here. And now we're going sideways, so you can see that it's acting exactly as you would expect if there's overshoot. Okay, overshoot can put market out of balance. You expect stronger bearish correction that can break the trend line, even sometimes lead to reversal. So you just have to remain patient. This is the area where market needs to go back into equilibrium, into balance. It was a little bit too overbought, and you don't need no other indicator. I don't need no order flow, volume profile, stochastic, MACD. I can see just based on pure candlesticks and market geometry that this was overbought area. Okay, so we expect market to go back to balance. So this is just waiting area. Make sure you're patient. Basically, when I'm watching overshoot like this, I already know that I'm not going to be taking a setup inside of this channel, because what can happen, this is common trap, this is important. What can happen is they will, for example, show you set up something like this. They will do something like this, and you will think, okay, I gotta go long here because this trend line is going to be holding. But what you have to remember, that overshoot is going to accumulate the stronger bearish pressure. A lot of times they're just going to make it tempting here around this key level. Okay, I'm going to hide this around this key level, and they're going to drop it lower like this. So once I'm watching overshoot, I already know that what I want to see is first break of this trend and then push above EMA, filled second entry short to resume buying. Okay, so right now I'm just patient, break new low. Okay, but this correction down was too strong. Okay, I have a second entry short inside bar, so I can't take, but let's say there is no inside bar. I still don't like going short here. It's tempting to draw a wider channel like this, but I'm still leaning more bullish. Because in price action, bigger pattern takes precedence. This was the bigger pattern, so I still expect new high, and we traded up the entire day. So not only I have this uptrend, I have also this uptrend. So overall structure is way more bullish. So chances are much higher that we are going to eventually test the new high. But overshoot can screw things up, so I definitely need to remain objective. Anything can happen. Okay, market is working hard. This is why I was really thinking, okay, we can finally go and test the new high. I have a second entry long below EMA, but you know, there's a downtrend working lower, one leg down. Also can reset, you can view it like this. So I need some high low that never formed, breaking new high. We're breaking lower now, so market needed to test the new low for this downtrend. After all, break, new low was tested, so now all downtrends played out. Congestion area, so I cannot take anything. Market keeps going higher, and now this looks like finally market is about to test the new high, because even this downtrend created by the overshoot has a broad break push to new low, so there's no reason for the sellers to continue working lower. Push above EMA is indicating, okay, we're about to test the new high, and I'm looking for second entry long at the EMA. You know, we are very close to creating a second entry long, but I have count reset here. Yes, count reset, first entry long, second entry. This is a visual second entry long. Very tempting. I'm going to mark it more advanced because, you know, as we talked about, you really expect new high to be made. You're at 2 key entry points, and this is a decent setup, but there's a count reset, so beginner trader is treating this as first entry long. Market is right now going higher, and it's pretty much getting way too late. The market is about to close. So this is the overall structure for today. It was a very nice trading day. Pretty much simple price action, simple uptrend working higher. I don't see trades that you can get trapped on, so pretty simple day. Not that many setups. There are a few good setups. This one was a great trade. This one was a great trade as well. You can consider this for second entry short, and you can consider even this high low. This is also, you know what, I'm going to mark it. This was more gut feeling based trade, but you can already see that the price action is bullish after you push back above EMA. It's a shame there was no normal bar. There's an inside bar. This was a great about this setup. And then you have overshoot, where you pretty much have to be patient. You have to wait a turn, and then after overshoot plays out, then market can continue going higher. So yeah, simple price action. There's always a channel present on the chart. This is why we're always drawing them, and this is how we follow price action rules. So I hope you had a good trading. I'm going to wrap it up. I'm going to talk to you next time. Good luck your trading.